The IRS is open for business, and this upcoming tax season will look very different from the last few years. The IRS will start accepting federal returns January 26th. That this coming Monday for you, and early filers typically see faster refunds, especially with direct deposit. The Georgia Department of Revenue says filers in the Peach State will use a new flat income tax rate this year, changing how refunds and balances owed shake out statewide. Georgia has also raised its standard deduction up to $24,000 while eliminating most personal exemptions. Joining us now to break this all down, make it make sense for us, is Mark Steber, Senior Vice President and Chief Tax Officer at Jackson Hewitt. All right, so Mark, so glad to have you with us. You oversee tax policy and strategy nationwide. Tell us what changed this year that most taxpayers still don't realize yet.
Well, I'm amazed at how many people didn't realize the big, beautiful bill touches tens of millions of Americans. New deductions for tips, for overtime, a new senior deduction for automobile interest if your car is assembled here, a new state and local deduction for salt taxes, and a whole lot more. You touched on some of the Georgia ones, but similar on the federal, larger standard deduction, larger child tax credit, and more on everybody's paper this year. So watch out for those things. A lot more money at risk.
So when you look at Georgia specifically, are you seeing more people unexpectedly owing instead of getting refunds?
We've seen that over the last few years nationwide, and there's a variety of reasons. More people have side hustles or crypto, and they're not really doing withholding like you do if you're an employee. But we think that's going to change this year under the big, beautiful bill with all those new deductions that I talked about. Plus, a lot of people have kind of gotten wise to that I need to pay money in throughout the year if I'm self-employed or I have crypto gains. So we're thinking that this year is going to be a much bigger year for tax refunds for a lot of reasons, the least of which is the big, beautiful bill and all those big new tax deductions that are coming, plus life changes as well.
From a compliance standpoint, where are taxpayers most likely to get tripped up and trigger delays or even audits for themselves?
Yeah, a lot of mistakes can happen on a tax return, especially if you do it yourself. The one thing that I see that causes a lot of pain and consternation and delays, as you point out, is when you try to get close or you guesstimate or estimate an amount. And that's not the way the IRS or your state works. Those numbers have to match up and match up precisely with what the IRS has on their system, on your W-2, your 1099, your K-1, and all the rest. So don't try to get close when you're doing your taxes. And that's why being organized, especially now when those forms are starting to come in. So if you think you remembered one and it was about $8,000, about doesn't cut it. You got to be exact, or the IRS is going to perfect that return, and that can add weeks to the delay on your refund timing.
So we know the IRS is now leaning harder on digital reporting. How aggressive should taxpayers expect enforcement to be this year?
Well, I don't know about so aggressive, but they do have a lot more tools in their toolbox. They have a lot of details on electronic data, W-2s, 1099s I mentioned, but cryptocurrency, side hustle, those cash transfers on those electronic platforms, and all the rest. So if you're thinking the IRS won't know about it, or you've been given bad information by your tax friend, Uncle Bob, that really doesn't matter, that's a hobby or that's a side hustle, make sure you understand the rules and make sure your tax pro knows that you've got that activity, because you do need to be precise with the amounts, and you also do need to be accurate. Otherwise, you risk the interest of the IRS. But what I'll tell you is this, Aisha, most people, hurt themselves by leaving things off their tax return. There's a lot of great deductions for your side hustle. There's a lot of ways to reduce your gain on your crypto by taking attention to your basis. There's a lot of really good rules. So leaving it off might sometimes seem like a good idea, but that's usually not in alignment with the law, and it usually costs you money because of some of those great tax breaks. So talk to a trusted, experienced tax pro. They can get you a bigger refund legally and assuredly faster.
All right, we are looking forward to a smooth income tax season. We thank you for being with us today.